Subsidiary ledgers sound complicated, but they're not. They actually lessen the complication. They make it less cumbersome in the general ledger. So if you go way back to that, we journalize from the journal and then post to the little mini accounts. Here we've got the general journal. So it's kind of a mess because it's all in one spot. And then we post to the general ledgers. We've got it in order of ALO and then income statement. The reason we talked about the computerized component yesterday is usually there's a button that you push that does all of the posting for you. The more sophisticated that computer system is, the more expensive the price tag is. These are what are called, in the general ledger, control accounts. In the general ledger, you'd have one that says AR, you'd have one that says AP, and those are what are called control accounts. If a business has a ton of ARs or a ton of APs, so in other words, a ton of customers that owe us, or a ton of people we owe, they're never going to fit in those little control accounts. And then trying to determine who the ARs are or who the APs are will get really cumbersome, and these would literally burst at the seams. So from there, businesses with a lot of customers who owe or a lot of people we owe, they create subsidiary ledgers. So like a mini version of what's going on here to just free up the clutter in the control accounts. An AR subsidiary ledger, so now let's strip that down. We already know what AR is. We already know what a ledger is. It's just a secondary or subsidiary ledger, so this one doesn't burst at the seams. And it's basically a list of all of our customers. An AP subsidiary ledger is a list of all of our vendors who we owe. We still have to have these subsidiary ledgers talk to the control accounts, though. And I'll show you a visual picture here in a moment. You should have this in your notes. So we see a listing of the accounts receivable subsidiary ledger. I see Aaron Company, I see Brandon Inc., and I see Karen Company. If these are ARs, these are assets. We own the right to getting paid. These are customers who owe us. And instead of trying to squeeze it all into the AR ledger, which is part of, the general ledger, instead of trying to squeeze it all in there because we've got some activity debiting and crediting Aaron, we've got a debit and credit in Brandon, we've got a debit and credit in Karen, it's not going to fit here. Yeah, we could make this bigger, but then it's kind of like, well, is the debit for Aaron, Brandon, or Karen? Is it a credit for Aaron, Brandon, or Karen? It's too much. And so what they say is, okay, simplify it. Make another one and have them all, each customer, but then take those final balances of $2,000, nothing, and $2,000 and report it over here. What is this called? The control AR account. So let's look at the debits and credits a little bit. If we see an asset debited, does that mean it's going up or down? Up. That means we sold something to Aaron Company and they said, we're not going to pay you, bill us. Okay, so that asset goes up. I'm just going to make a little mark over here. $6,000. Brandon has $3,000. Karen has $3,000. That miraculously equals $12,000. So the little debits going on in the subsidiary ledger talk to the control account. Let's look at the credits. What does it mean when an AR is crediting something? Normally an asset being credited is like, it's kind of a bad thing. Why is it a good thing in this case? We are getting paid. So, Aaron, he didn't pay all his bill. Some of it though. Brandon paid all his bill. And Karen paid half. Does 1,000 plus 4,000 plus 3,000 equal 8,000? So instead of trying to squeeze, look at how messy that is. Instead of trying to squeeze those 3 debits and those 3 credits into this control account, we're saying, over here, it's kind of like a spa. Each account has its own little activity. And then we shove it back to the control account as 1 debit and 1 credit. To show that out of the $12,000 that was owed, we still have to recover $4,000. And if we want to see a more formal breakdown, we can go look in the subsidiary ledger. It's that simple. Does that make sense? So although, excuse me, although when looking at it, it looks really complicated, when you start looking at the numbers and how it works with a control account, it actually is a lot more seamless. If we looked at it from again, is this in your notes? It's just another version of it. It just looks different. So I see AR. So these are customers. Subsidiary ledger, we see a breakdown of C. Daly, B. Johnson, L. Jones, P. O'Reilly, and T. Smith. Instead of trying to squeeze all of that into the small control account, which is part of the general ledger, they're saying, let's just take all the balances and throw them in as debits over here. And I can guarantee if I take a look at all their balances at 200 and 700, 500, 2,500, and 1,000, as you can see with the math, that's what the balance equals. So the control accounts always have to play nice with its coordinating subsidiary ledger. What would this look like if it was an AP ledger? It'd all have credit balances, but it'd still be the same thing. It's just a list of people who we owe, talking to the AP ledger. So like if I'd switch this to AP, and these were all people we owed, it would just be the AP ledger and it would have a normal credit balance. But the two still have to equal. What are the advantages? The big one is number 2 here. It frees up that general ledger from exploding at the seams, because this general ledger would never fit all of that activity. It still needs to tell its story, but it would never fit. So number 2, freeing up all those extra details. It shows in a single account how one customer or one creditor / vendor is looking. So if I go back a couple slides, if I can see that, holy moly, we've allowed customers to charge $12,000, but you know what? They've paid it down to $4,000. That's the big picture story. That's the control account story. But if someone wanted to say, well, where's Aaron stand? Well, I can see Aaron charged $6,000, paid $4,000 off, but still has a balance. So what that number 1 is talking about is if I want to go see a single person, a single customer, a single vendor, I can go look at it in its little account instead of wading through the control account. Again, it helps with errors. But I like number 4. It makes it possible to divide up the work. A lot of businesses, a lot of accounting departments have an AR department, an accounts receivable department, and an accounts payable department. Not that they don't care what either other camp is doing, but if I'm in the accounts receivable department at Superior, I'm going to work really hard to make sure our customers are paying us. And I'm going to see a breakdown of who our customers are, what they owe, and what they pay. Do I care so much about the AP? Well, yeah, because I work for the business and I'm, concerned with the livelihood of our whole team. But then the AP people are working really, really hard to get our bills paid off. And if you try to mix it all, it gets a little cumbersome. So it helps people divide out and conquer the big jobs. That's it. The big vocabulary you need to know was this slide. Subsidiary ledgers, whether it's AR or AP, tell the individual customer or vendor stories, but they talk to the control account, and all the control account is concerned with is a total of the debits, a total of the credits. I'd like you to, kind of like yesterday, do some questions. And then we'll go through the answers. And then we're actually going to do like an actual problem as well. So why don't you do questions 5 and 6? I bet you'll find them on page 352. Do I remember that correct? Answer the vocabulary. We'll talk about it. And then together we'll do some end of chapter like actual problems. So just do questions 5 and 6. Let's go through the answers. So with number 5, what are the advantages of using subsidiary ledgers? Who feels like they can answer that one? You hit point number 2 on the head. Perfect. It shows a breakdown of each customer or each vendor who owes money in any format. Helps in locating errors, and it gives a division of labor opportunity. So you working on all the ARs, you work on all the APs. The bigger the business, the bigger those departments end up being. Very good. 6A, when do companies normally post to the subsidiary account and the general ledger? We didn't really talk about this. Basically, the subsidiary stuff is going on daily. The control accounts, you really only post like at the end of the month or the end of the fiscal period. So Aaron company owes us money. We'd put that in that Aaron company subsidiary ledger right away. Aaron pays part of his bill, we'd put that in right away. Aaron pays the rest of his bill, we'd put that in right away. We would wait to tell the control accounts or the AP or AR and the general ledger until the end of the month. Because they might not really care that Aaron charged it and paid part and then paid it off at the end. We just want to know that, hey, Aaron paid his bill. Okay. And then part B, describe the relationship between a control account and a subsidiary ledger. I'll just read it. I've got some stuff highlighted here. A control account is a general ledger account that summarizes the subsidiary ledger data. What a perfect explanation. A control account is a general ledger account that summarizes what's going on in the subsidiary ledgers. Think of this subsidiary ledger as kind of an offshoot or a tree branch. You know, if I had the accounts receivable tree and all the tree branches were all the customers. If I had an AP tree, all of the tree branches were all of the customers. Or excuse me, people we'd owe money to. Does that make sense? I hope it's easy. Let's try it in action here. We're going to do brief exercise 7-4. I believe you have a worksheet for that. Do you have a total empty page, or are the customer names on there? Sweet. but there's no numbers in there or balances or anything. Okay, so you have 3 customers, correct? Do we have Austin, Diaz, and Noble? What? Do you have different? Brief exercise 7-4. You don't have Austin, Diaz, and Noble? No. So that we found an error in the worksheet. Because do you see on page 353? Yeah. So put, who do you guys have as the first one? Auna. Change that to Austin Company. Change the second one to Diaz Company. Change the third one to Noble. We don't see errors often, but we found one. Okay, so they are, let's read here. Presented below is information related to Ganter Company for the first month of operations. We have AR subsidiary ledgers. So what I want you to do does it say AR subsidiary ledger up there for you? Oh, it does. Okay. So AR is an asset. These are our customers who owe us. A subsidiary ledger is a tree branch off of this general ledger, specifically the AR. What's this called down here? Control account. Does the control account even care who our customers are? Not really. Do they care about the debits and credits? Not individually, but at the end, okay? So if we were journalizing all of these sales to these customers on account, we'd post them right away to the subsidiary ledger or the control account. Which one? Subsidiary. We're going to wait until the end to tell the control account what they need to know. Okay? So on January 7th, Austin Company charged $10,000. So let's go find Austin. On January 7th, we had a debit of 10 grand. 10 grand plus its zero balance equals 10 grand. Should we run over to the control account and tell them that yet? January 15th, Diaz bought something from us. $8,000. Did they pay us cash? No, we allowed them to charge. So we'd go down to Diaz, which is also, all of them are assets, so all the debits are the pluses. 8 grand plus nothing is 8 grand that they owe us. And then on the 23rd, Noble did the same thing, only charged 9 grand. So we're sitting here with these balances. We hope they're going to pay us. And that's the job of the AR department, to be on these customers to pay. Did Austin pay all of his bill? No, it did not. Austin paid a majority of the bill, but still has a remaining balance of 3 grand because it's got a balance of 10, paid 7 to equal 3. Diaz paid 4 grand, half. What should the AR department do? Call and say, hey, pay your bill, offer better discounts, or whatever the case is. But Noble paid all, so they owe 0. Is it time to tell the control account what's going on? Yes. Because we have these 3 customers. That would have never fit in this little tiny thing. It would have never fit. So that's why we stop and say, let's have individual accounts, what's called a subsidiary ledger, and run with it. Okay, so we've got a debit and we've got a credit that we have to tell the story of. Could you technically take the 10, the 8, and the 9 to equal what? Okay, and then we've got the 7, the 4, and the 9 to equal. I don't know why my, I see what's going on here. Now we can tell, oh, it's not going to let me here. Fine, it's not going to play nice, I'll move it up. So we take the 27,000 that you added up, the 20,000 that you added up, and you tell this control account all the information they need. All they care about are the totals. Yes. Yeah, it must say it somewhere. The accounts receivable balance that appears in the general ledger at the end of January. So it will usually tell you. Assume it's the end of the month. So this is more of a holistic snapshot. These are the individual details. Could you do this for an AP? Yeah, it's just, it would all be flip-flop from a balance perspective. You post up here every time. You update the control account at the end.